How's it going, everybody? It's Stas here. So the stock market had another red day today. S&P 500 down $20, down about 0.6%. The Dow Jones down $180, roughly 0.7% down. And the NASDAQ ended up going down $100, 0.9% in the hole, as the Russell 2000 dropped the ball, down 1.5%, down $23. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over whether or not this is a buy the dip scenario or whether or not the markets could go even further down from here. And I also want to break down the top stocks that I'm looking to trade, that I'm looking to buy as we're wrapping up the month of July here in 2020. So a lot to go over in this video. If you guys find value in it, as always, hit that like button for me, consider subscribing, and check out all the free links down below in the description box if you want to join our Discord chat, Facebook group, and if you want 2 free stocks from Webull valued up to $1,400, all you have to do is deposit $100 into the account using my link down below in the description box, and we both get 2 free stocks valued up to $1,400. So let's get into the video, guys, starting off with the S&P 500, and again, it ended up going down $20 today, down 0.62%. And one thing that we noticed right off the bat here on the hourly chart on the S&P is we held 3,200, and 3,200 is a point that we held back on the 16th of July, 15th, 16th of July, and from there, that is where we actually rallied up to that peak, not an all-time high, but a peak in terms of this hourly chart at around 3,280. So the fact that we are holding 3,200 and we're in this general range between 3,200 and 3,220 at this point, that is a good sign that the bulls they're not taking charge quite yet, but the bulls are slowly starting to pile in, right? The bulls are holding us at about 3,200. That's a good sign that potentially here Monday, Tuesday next week, we could end up rallying out. But the thing is, we haven't rallied out quite yet. We haven't seen that full-on breakout confirmation, which is why, again, the bulls are not fully in charge quite yet. And going to this intraday chart, you'll be able to see exactly what I'm talking about, right? This morning on the S&P 500 here, we tested 3,200. We held it. We rallied back up, tested 3,220 roughly. We failed, ended up going back down to 3,200, tested it yet again, rallied back up to 3,220. We failed again at about 3 o'clock here Eastern Standard Time, and then we ended up dumping all the way back down to 3,200. So that is telling you, this intraday chart is telling you how important these two levels are on the S&P 500 in determining direction, especially for next week. At this point, we don't have much direction. We're just consolidating, and we're waiting for that move. And for next week, we're going to see, okay, do we take out 3,220? Do we take out the high from from today, which was 3,226? And mind you guys, we failed taking out yesterday's low. That is not good for the bulls. Yesterday's low was right around 3,220, 3,225. So the fact that the bulls couldn't break out, that is not good. So we're in, again, this kind of, medium spot at this point where the bulls and bears are fighting. And next week, if we end up rallying, let's say, into 3,240, 3,250 on the S&P, that is where I think bulls are going to start to take more control. And on the flip side for the bears, right, I mean, if we take 3,200 out on the downside, that is where we might see a further drop in the markets. I mean, that is where the S&P 500, and mind you guys, 3,200 is this 50 SMA support here on the 4-hour chart. So if that breaks, this 50 SMA breaks, a spot that I think we could be going to is 3,180. Let me extend this to the right so you guys can see that. 3,180 was the resistance from a couple, 2 weeks ago. Then from there, 3,180, 3,150. And honestly, I talked about this, I think, yesterday or the day before, a bigger level of support where it would honestly be a healthy pull down for the S&P to get there would be around 3,060. If we got there, judging from this past peak at around 3270 on the S&P 500, that would be around a 6% sell-off. And anything above 10% is what's classified as a correction. Anything above 20% in terms of a, drop from the top in the markets is considered a bear market. So we're nowhere near a bear market. We're nowhere near a correction, but this could be the start of it if those technical levels break. And am I fully convinced that they are going to break at this point? No, because we're still seeing, again, support at 3,200. And until 3,200 breaks, I still think the bulls are going to bring us higher next week. And that's just my personal opinion. And we'll go over some of my trades today, which will kind of go with that narrative that I believe the markets are going to rebound. And I've been wrong, guys. If the markets end up taking this 3,200 level out, we could be going lower, and at that point, I'd probably have to cut out of some of my positions, but we'll get into that in a little bit here. And taking a look at the Dow Jones Industrial Average, down $182 today, like I said, down 0.7%, and take a look at where we're trading. We've talked about these levels, guys. 27,000 on the top, big resistance. We can see the Dow double top there. That was bearish. We sold off. Played out pretty much accordingly there, because whenever you see a double top, not always, but that could kind of foreshadow maybe a drop, maybe a pull down coming in the future, and that's what we got. We got the double top there. I guess you can say it was a triple top, but either way, we got that sell-off, and we ended up holding at $26,400, which is a pretty big level of support here on the Dow, right around that 50 SMA, right around that old resistance stemming back from the beginning, actually more like the middle of June. You guys can see in the middle of June, we struggled at 26,400 pretty much all the way up till the middle of July. So for a full month, 26,400 has acted as a pretty solid level of resistance. So watch for it to hold there. I mean, guys, honestly, if it breaks this point, the Dow Jones, watch for it to maybe go, let's take a look here, probably down to about 25,800. That's where I think it could go to next, based off of these support levels that I have on this 4-hour chart. So watch that in terms of the Dow Jones this upcoming week. At this point, is this a correction? No. Is this a bear market? No, guys. It's a healthy pull down from what these technicals are showing, and we could really go higher from here. We just have to wait for that confirmation, like I said, with the S&P. And when it comes down to the NASDAQ, we took out that 50 SMA here, that green line on this 4-hour chart. That has been a level of support stemming back months. Pretty much this whole entire rally from the lows, the NASDAQ has held this green the 50 SMA here on the 180 4-hour chart. And with today's drop, actually it was really yesterday as well. With today and yesterday's drop, I mean, we got under that moving average, and at this point, it seems like we are finding some sort of support at around 10,400. Take a look at what we're seeing here. At around 10,400, let me extend this to the right very quickly. You guys can see that is where we held back on the 14th of July. It was a resistance back on the 2nd of July. So that is a good sign for the bulls here. Good sign for the bulls that 10,400 is holding. But if we zoom in a bit, we haven't shown the confirmation of the breakout at all. I mean, we're still under moving averages here on the 5-day, 5-minute, and until we get out of 10,500, 600, I mean, I still think the NASDAQ could go lower. And at that point, 10,600, that is where we should be breaking out of these moving averages. And on the intraday chart, you guys can see here, we held it very strongly, that level at 10,400. So if this breaks on Monday, guys, if we see some massive pull down in the futures and we start to see some blood in the streets again on Monday, Sunday night, Tuesday, whatever, the NASDAQ could end up gapping out down if we break 10,400, I mean, the next big level I see it going to is around 10,100, which could give it around a 3% drop from where it is now. And, with how tech's been looking, I mean, tech rebounded a bit today. We'll get into that in a little bit here. But with how red tech has been, another big red day, one or two big red days in tech, and the NASDAQ could easily be back down to 10,100, 10,000 bucks even. And at that point, guys, I would be very interested in buying some tech stocks, maybe even an ETF here like TQQQ, which goes up whenever the NASDAQ goes up. And mind you, this is leveraged. Always trade with your own research, due diligence, and this is a 3x leveraged ETF, so it's a bit risky, and you guys have to understand that before, potentially trading this. And this goes up 3 times what the NASDAQ is going up. And if you guys don't want leverage, you don't want a leveraged product, you could end up using, QQQ. And sorry, I just got a text message. I'm reading it very quickly, guys. But yeah, either way, you can use QQQ if you don't want leverage. 3 Qs there. That's pretty much the same thing. It's not leverage, and it tracks the NASDAQ. So you guys can see, these ETFs, they've taken a big hit ever since the NASDAQ is taking a hit, tech's taking a hit. And these could offer, some potential here, especially if you think that tech's going to rebound, NASDAQ's going higher, the markets in general are going higher. So let me know down below in the comments section, what are your thoughts on the markets today? Why did the stock market drop? I mean, a lot of people can talk about why it dropped today. I can't really pin it on one thing, but we saw jobless claims numbers yesterday come in. I mean, we're kind of, what's the word at this point? Desensitized. We're desensitized to these jobs reports, jobs claims, because we all know they're going to be 1 million plus every week, and we got a bit of a reacceleration in those jobless claims numbers. Does that have anything to do with the sell-off? Probably not. I think it's more profit taking across the board, and again, we're seeing some buyers step in here, but we haven't gotten the full-on confirmation of the next breakout, the next level up, which is kind of what I'm waiting for this upcoming week. And to have some exposure to that potential breakout before it happens, I actually put some capital to work. And I have swing trades. I've had swing trades that have exposure to some tech here. So it's not like I don't have any exposure. I have Netflix at $4.90. That's one of the swing trades I initiated this week that I'm still holding. So that's one thing I'm still in right now, guys. Netflix at $490 a share. I'm down a little bit on that, but ultimately I think Netflix is going to rally back up. I mean, we can see it's holding 460, the 180 SMA here on the 4-hour chart. Now it's rallying above 470. 475, which was a resistance back in the end of June. So that's a good sign here for Netflix, and it gives me confidence to hold it heading into the weekend. And we were actually up today. I mean, we were up 0.6%, up $3 on Netflix, while all the other big tech names were down. So there was a bit of strength here in Netflix. Again, I'm in at about $490 per share. But until we break out of this hourly chart, you guys can see on the hourly chart here, we're under main moving averages, the 50, the 180 SMA. I mean, until we break out of these, I'm not going to be adding more to my position. I might add more to it if it breaks the 50 SMA. It struggled at that point today. So Monday, if we take out 490, 495, 500, I might add more there. But until then, guys, I'm holding on to my swing trade. It's a small position. I'm not going to lie. It's a small position in Netflix here. I plan on adding more, but at this point, I feel comfortable holding into the weekend, over the weekend. And another one here that I picked up today to get a bit more exposure to tech was Microsoft, guys. I know it might be a little bit crazy to you guys. It didn't fully confirm the rally, but like I said, I'm trying to get exposure before the potential rally, and if it goes against me, let's say it gaps down on Monday and I lose money, it's okay, because when I swing trade, you know, I scale into my positions, meaning I only put in 10-15% of my money at first in case we get a drop, in case, you know, the stock goes the opposite direction. This way I'm mitigating my risk. I'm not losing as much money as I would have, let's say, if I went all in on Microsoft and then on Monday it dropped. So I initiated a little position here on Microsoft. It was down about 0.6% today, but the bulk of the selling came yesterday. And honestly, ever since they reported earnings, it's been selling off. And it got down to about $197 today, but I actually got in at $200.50. So I'm up about 80 cents on my position at this point, and I'm going to swing trade it, guys. I have faith in this company. I think they'll end up bouncing back in the short term. And if it takes out, and the truth is, guys, I plan on adding more money above 205, 203, 205 in that general area. And on the downside, if it takes out this 180 SMA, if 200 breaks, 198 breaks, that is where I might cut losses. Again, it might not go my way. I said this, and I always say this on the channel, guys. You don't win every trade. It's impossible. This might not go my way, but I want that exposure heading into the weekend because we've seen tech go bananas. I mean, we've seen this stuff. Literally, this past... when was that? Tuesday when tech went up 7%. It seems like Amazon was up 7%. Microsoft was up 6%. That could happen again, and I want exposure to that. So that's kind of why I'm in Microsoft, Netflix, heading into the weekend. Those are my two prominent swing trades at this point, and I'd love to know what you guys did down below in the comments. What are your thoughts kind of heading into the weekend? Are you nervous holding positions here in the weekend, over the weekend, in this time period we're in? I would love to know your thoughts down below. Now, let's talk about some stocks. What am I looking to trade other than the ones that I'm already in? Let's talk about Tesla. I mean, Tesla sold off today down about 6%, down $100 per share. At its lowest earlier in the day, it was down to $13.66. And if we pull up and kind of pull up their numbers here, I mean, this is an article talking about regulatory credits. I'll link it down below in the description box. Someone was kind enough to share this in the Discord chat today, which again is linked down below in the description and free of charge to join. This kind of, and it's done it in the past, I mean, this kind of boosted up the EPS numbers for Tesla. So this could be a reason why these regulatory credits, why the stock ended up falling today. That's kind of a bear case here, and I'm not a bear by any means. I'm just trying to play, both sides here. And we can see here, for those of you guys that don't know, what are regulatory credits? Environmental, they are environmental emissions programs around the world, such as the Zero Emissions Vehicle Program in California, that give out credits to automakers that produce and sell electric vehicles, like Tesla. I mean, that's what they do. They produce and sell electric vehicles. In addition to Cali, this is not important, but we'll say it anyway, there are at least 13 other U.S. states that have similar programs in place. If an automaker doesn't have enough credits by the end of the year, and this is how they make some money, guys, it could it can face punishment from state regulators. And how Tesla makes money here, check out this next little excerpt. Since Tesla produces nothing but electric vehicles, the company racks up way more credits, way more of these regulatory credits than it needs to meet the minimum regulatory requirements. So it turns around, hey, take a look at this guy, smart on Tesla's part. It turns around and sells the excess credits to other automakers so that they can avoid penalties. And this, and I don't know why this is refreshing here, but this is kind of boosting up their EPS. And for example, Fiat Chrysler has reportedly committed to buying $1.27 billion in credits from Tesla to comply with new European environmental regulations that go into effect in 2021. So people argue, without these regulatory credits, Tesla's not even making profits from vehicles. And for me, guys, I think that, listen, these regulatory credits, they're a way to make money right now for Tesla. Is this a long-term profit strategy? Absolutely not. They're going to fade away as more companies out there start to make more electric vehicles and get these emissions for themselves, or these, what's it called? The credits for themselves. But at this point, for the next couple of years, this will be a way for Tesla to make money. And the idea is that it's going to go away soon, but the profits from their vehicles, their other businesses, energy side of the business, the profits from that, it's going to overtake and, obviously be the profit engine of the company. So at this point, that could be why Tesla's selling off a bit today. Again, down 6%, down $96. And we were talking in the Discord chat today. I mean, will Tesla go down to $1,000? I personally don't think so. I mean, I don't think buyers out there, institutions will let it go under $1,000. And if it does, guys, I'll probably be a buyer of Tesla. I mean, I have shares of Tesla back in the 300, 350 range, 360. And for me to add more to the position, I mean, it does have to come down a bit, and anything under 1,000 is where I'd kind of consider adding more there to my position, and especially a swing trade position on top of that. I mean, under 1,000, around 1,000, I'd love it. And honestly, again, I don't think it's going to get to $1,000. A more realistic price target, in my opinion, if we do see further downside here, and we are seeing it, guys. I mean, we did break a high at about 1430, the old resistance. I mean, we didn't hold it as a support today, which was pretty negative here for the bulls. So we might be seeing further downside, and around 1,200. I mean, that is where I think the lower end of Tesla, I mean, that's where I think it could get to, 1150, 1200, right around this 180 SMA. And even at that point on this 4-hour chart, that is where I'd consider buying Tesla too, anywhere from $1,000 to $1,200, although, again, I don't think it's going to get to $1,000. But either way, that is what, I'm thinking there on Tesla. I think that it could head lower here. I mean, again, we were down today, and it's not showing any signs of a reversal. So watch 1,400 on Monday, as that's a pretty pivotal point here. Amazon, guys, Amazon is another one here that's slowly starting to turn around. I mean, we hit $2,800. It's trying to turn around at least. And on this 4-hour chart, it seems like we're overall holding it. I mean, we're holding the trend on this 180 SMA, which has held over the past couple of weeks. And now you have to ask yourself, I mean, how's Amazon going to do in earnings? That's kind of what it comes down to at this point. They're reporting earnings on the 30th, which I think is Wednesday or Thursday of next week. And that's going to pick the direction of the stock. And in my opinion, I'm not going to play earnings here. I don't do that a lot. That's not my game. But if I were to bet, I think Amazon's going higher. That's just my personal opinion. You always do your own due diligence. Always do your own due diligence. I said that twice. I meant to say research. And don't trade on my opinion, guys. That's what it comes down to. Don't trade on my opinion, but I'm watching the weakness here in tech. That is kind of what I want to tell you guys, and that's the point I'm getting across here, which is why I have exposure to Netflix, Microsoft right now. I have interest in tech, but I don't want to overexpose myself, which is why I didn't pick up Amazon today. And again, I'm going to wait until probably earnings to see what ends up happening with the stock. And we saw a massive move today in AMD. Intel reported earnings yesterday. I don't know exactly what they reported. I think they beat on one part of their earnings. Either way, they actually announced news that, and this is kind of why AMD's popping today. They announced news that, and it's today on Friday, that its next generation processors are being delayed. Intel's 7-nanometer chips won't reach products until late 2022 at the earliest, the firm's president said today. And, yeah, stocks down 16% on that news. AMD up to $70 a share, almost up 16.5%, up $10. It's almost like all the Intel, investors, they dumped the shares and went straight to AMD. It's funny. One's down 17% almost, one's up 17% almost. So at this point, AMD, am I chasing it? No, but I'm still watching it as it is very volatile and it's very hot at this point. And the restaurant stocks today, Starbucks, one of them here, up 0.5%, up 42 cents. Overall, it's holding $75, old resistance as a new support. That's a very good sign here. And quite honestly, it's forming this J-hook pattern that could end up being a cup breakout pattern if we fill up to 77. And mind you, we're at 75 right now, so we could end up getting a move from 75 right here up to 77. I mean, that's kind of what I'm looking for this upcoming week on Starbucks, which could yield around 2%. And from there, if we complete the cup and we break out of 77.50, I've been talking about on this channel, $80 is where I'm looking for Starbucks to get to. That's the price target in the short to medium term that I do have on the stock, right? So from 75 to 77, that's the first move I'm looking at. And from 77 to 80, that's the second move. Cheesecake Factory today ended up doing very well, up 3.4%, up 80 cents, breaking $24. So this is now in breakout territory. Again, we've been talking about 24 bucks on this channel. I called this stock out yesterday, and the bulls came and they did their job. So at this point, next resistance coming up is going to be around 25.60. So watch that this upcoming week. If that takes out, we could be, going up high 20s, even testing out that $30 level that we were at in the beginning of June. And mind you, Cheesecake Factory is reporting earnings on the 29th of this month, 5 days from now, the day that I'm filming this video, and that could be a very volatile earnings play right there. So watch CAKE. And Texas Roadhouse, another restaurant stock today. I believe they were red, actually green rather, up 3.4%, up $1.70 today. And like Cheesecake Factory, this one broke a pretty big resistance, right around $52.80 to about $53. The stock struggled there, pretty much all of March, end of March, or actually end of April, struggled there, end of June, struggled there a couple days ago. So now that we're taking out 53 bucks, it's a good first step, and it's a good first step to us getting back to 62. And to get back to 62, I'm going to need to see, honestly, some more upside push, probably out of $55. But once Texas Roadhouse takes out $55, from there, I think 60s is in reach. A $5 move could happen, and maybe even back up to 62. That gives it around a 10% potential for profit there. And that's pretty much it in terms of, stocks here. And we can go about a lot more stocks. And one thing to mention before we actually end the video is gold. I mean, gold today, guys, $1,900 an ounce. Isn't this insane? I mean, we've been talking about this for months on the channel. Ever since, gold broke $1,750. This was the big turning point. I mean, we covered this on the channel months ago, guys. Take a look. I mean, gold was at $1,750 from the middle of April all the way up till the middle of June. So 2 months, it was building a base support. I mean, it was a resistance as well. It was struggling. And we said the second it takes 1750 out, watch 1800, and from 1800, it can explode from there. And I mean, it's exploded, guys. And gold has really been rallying as well. I feel like silver, it's really been fueling gold's rally. If you guys have been watching silver's been taking off. It's unbelievable. I mean, today didn't do much. I mean, 0.1%, nothing crazy, up about 3 cents. But if you take a look, ever since the end of June, I mean, silver's gone from 18 an ounce to 23 an ounce, and that is in under a month. That is a move of about 30%. So this is completely destroying the stock market returns. Gold is beating the stock market returns as well. And although, yeah, you can argue silver's a bit overheated, you'd be stupid not to watch it. I'm just being honest. I'm sorry if I hurt your feelings. You're stupid if you're not watching gold and silver, because there's a lot of money to be made here, not by only holding the silver and the gold physically, but by trading miners ETFs like GDX, right? GDX is a gold miners ETF that I personally trade all the time. And they benefit from gold's price going up, which is why you're seeing GDX kill it, right? I don't know any silver ETFs, mining ETFs off the top of my head, but you can look at SLV. SLV is a great ETF that tracks the price of silver. So you have direct exposure to silver's price without actually owning silver. And GLD is the same exact thing, but for gold. You have direct exposure to gold's price without actually owning gold. So watch these guys. I know they're not talked about. I know they're not the most glamorous, but there's a lot of potential here, especially in today's monetary environment where the Fed's interest rates are zero. There's insane money printing. Jerome Powell was saying he's not even thinking about cutting the or raising their rates, whatever. So you guys have to understand the role that the precious metals play, because they play a big role, and there's a reason why they're going up here. So I'll leave it at that. If you guys found value in this video, hit that like button for me. Consider subscribing to the channel, and don't forget to claim your 2 free stocks from Webull. Again, these are valued up to $1,400. It's pretty much free money, guys. All you have to do is deposit $100 into the account, claim your 2 free stocks, and heck, if you don't like Webull, you can just take the money out, and you have your 2 free stocks as free money at the end of the day. And again, that is linked right down below in the description box. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Peace out.